AMC stock and GameStop both had very volatile weeks, with AMC closing about 25% higher and GameStop fell about 15% when compared to the previous week. But what stole the show for me was the congressional hearing and everything that's going on between Congress and all of the CEOs and brokerages out there. And really, the future of investing is on the line here. I know that not a lot of people are excited and thrilled with Robinhood and everything that was going on when they were blocking trades on GameStop and Citadel and all of that, but I'm very concerned about the future of investing. And in this video, we're going to go over an article that talks about, it kind of goes back and forth between the conversation that was had between one of the CEOs and a congressman from Connecticut. So if this sounds like something you're interested in, let's get started. What's up, everybody? I'm Clay. We're going to make this the best year ever. We're going to grow our portfolios together, and we're just going to grow together. Now, if you like the content on the channel, don't forget to click that like button, and if that subscribe button is still red, we're going for 10,000 subscribers, so make sure you subscribe to the channel and become a bro. All right, now we're going to go over this article here and kind of the back and forth between the CEO and Democratic Congressman Jim Hines from Connecticut. So if you're from Connecticut, I don't know, maybe you should send in some emails after this video. But Hines starts out, I've reviewed the literature here and there's no ambiguity. I've looked at the academic studies. It's very, very clear what happens when retail investors trade a lot. Mr. Keller, in terms of the folks that are watching at home can understand what happens when retail investors trade a lot. Keller goes on to say, they lose and they lose consistently. We don't have to go in word for word or in all of that detail, but he basically says the more often you trade, the more likely you are to lose. Now look, there's a lot of studies out there that do show that day trading is riskier than buying and holding, but look, risk reaps reward. I'm not going to sit here and suggest that you should only be a day trader or only a swing trader or that value investing and long-term investing is the way to go. You know who you are in terms of investing. So whatever style and whatever strategy works best for you, that's what you need to go with. So yes, day trading could be riskier than buying and holding, but with risk comes a reward, right? You could hit a stock, you can gain 400% in one day. You're not going to get, I mean, you could hit that 400% in one day if you were, on a long-term buy and hold, but it's probably not a stock that you would have in your portfolio, right? If it's very volatile and you're a conservative investor, you're not going to be buying a stock that's going to jump 400% in one day, likely. And then Hines goes back on to say, but it's not just the structure of the system, right? When you look at the literature, retail investors lose because of a whole series of human biases, because they don't have teams of PhDs studying the stocks that they're buying, right? Now we need people investing our money for us. Okay, I see what you're doing here, Jimmy. Absolutely, Keller says. It's like sending the Little League team in from your neighborhood up against the New York Yankees or the Boston Red Sox or LA Dodgers. Frankly, we have these institutions with maximum institutional advantage, maximum technological advantage, maximum sophistication, and they get paid billions for investing people's money. So why not let them invest your money? So it seems like these two guys are on the same side right here, right? Retail investors, they always lose out on their investments, and institutional investors always make money on their investments. Look, guys, institutional investors are just that. They take so many fees out of your investments, and yes, they have their plans and they have their PhDs scouring through all of these investments, but they themselves can't beat the market. Look, if you're out there and you want a safe investment, or if you want a proven long-term investment, buy an ETF that tracks the S&P 500. Since inception, it's averaged about 10% per year, and that's what you're going to be making. You'll have bad years, you'll have good years. But if you want an investment, go ahead and just peg your investment to the market. That's the standard, right? That's what everybody shoots for. Did you beat the market? Did you beat the S&P 500? Did you make money? Did you lose more than the S&P 500 lost that year? Like, that's what they aim for, and that's what they hope to do. But institutional investors still can't beat the market. So with all of the billions of dollars that they waste every year doing these analytics, going in and paying these PhDs $200, $300, $400, $500,000 plus millions of dollars in bonuses to beat the market, they still don't do it. But they can pay them that because no matter if you make money or not, they charge you a fee to invest your money. So what do you think that they want? They want to invest your money because they make money off of it. Whether they hit a profit that year or they have a loss, they're still making money. And then they go on to say, oh, there's Himes, the congressman says, there's going to be a distribution curve. There will be some people who get lucky, who are at the narrow end of the curve, who do win. But on average, for the folks at home, the more retail investor trades, the less they will have in their investment and their savings. So guys, now the only way you can make money in the stock market, according to the congressman, is if you're lucky. If by some chance, that's the definition of gambling, right? And we know that investing in the stock market is not gambling. If you go in there and you close your eyes and you just push buttons, that's gambling. That's essentially what they're saying retail investors are doing. And in my opinion, it's nonsense. They have an agenda here. We'll talk about their agenda because he turns to this next guy. And of course, what does his buddy next to him say to do? Well, if you want to make money investing, you need to go out and you need to buy a Vanguard ETF. I just said that, right? But they want you to invest in their mutual funds because their mutual funds charge you fees to invest your money. Whether they win or lose at the end of the year, they always win because they're taking a fee off of your principal. It's that simple. They have their agenda. What's their agenda? Their agenda is to make money. So how do they get there? They need you to invest in their mutual fund. They need you to put your money in their institutional account so that they can make money. That's where they make their money. They don't make their money by outperforming the market. When they outperform the market, that's marketing in their terms. People will go out there and see, oh, this institution did very well. They had a great year this year. I should put my money there. So when they beat the market, that's their marketing attempt, but they really make all of their money on the fees they charge you on gains and the fees they charge you on their principal. So how do they get there? They need to make you invest in their funds, and apparently what they're talking about now is making it and trying to get it to become a law that you can no longer invest for free with your broker. They're going to, move things to commission. They're going to get rid of this small retail investor and force him to use institutional investors. I mean, it's smart on their side if they can get away with it. I know they've got the majority right now, so they've got a very good chance of getting away with it, but that's what they're looking to do. Now, if you found this video interesting, make sure to share it with somebody, spread the word on what Congress is talking about doing right now, because, look, yes, retail investing can be dangerous if you don't know what you're doing, but if you do know what you're doing, if you do your research, making money in the stock market is probably the easiest way to build wealth and really create a future for yourself and get that financial freedom that everybody strives for. So it's something you need to educate yourself. We need to read up on what's going on, especially with these laws that could potentially change the future of investing forever. Now, like I said before, make sure to share this video with a friend. If you like the content on here, make sure to click that like button and let us know down in the comments below what you think. Do you want to stand for this? Do you want the government to say, yes, you have to buy a government-backed security, you have to buy a government-backed IRA or some sort of investment vehicle so that they can rip the fees and you're basically sitting there accepting whatever they say is going to be given to you? Let us know down there, guys, and if the subscribe button is still red, please subscribe to the channel, become a bro, and let's grow together. And look, if you're brand new to investing, if you haven't got in yet, and if you want to, let these people know what's going on, there's a link in the description below for Webull. It is super simple to set up your account, and you're going to get a couple free stocks just for doing so. AMC is one of the stocks that they're giving out, so if you want to join the movement, if you want to invest in AMC, they're giving those out for free on the Webull account, as long as you sign up and deposit at least $100. So until the next time, guys, I hope that each and every one of you have an awesome day.